All right, traders, it is time to prepare to trade the best setups at the best prices. I'm going to be giving you my analysis on the SPY heading into tomorrow, and we're also going to be going over our key levels to be buying put options and call options. So in terms of the last video that I had made, I found it to be very, very useful. If you guys ended up following some of the trading plans that I ended up giving out, some of the ideas were the best level to buy put options and short the SPY was at $415.50 because SPY had a gap to fill at 415.50. We were looking for a gap, close reversal, a ceiling, a resistance level, a bearish confirmation, as this is the top of the channel and a huge downside potential level, right? So in terms of, was there confirmations to buy those puts? SPY partially, it almost filled the gap in the pre-market, but on the 30-minute time frame, it formed a very bearish candlestick right here. So if you see that bearish candlestick on the 30-minute at our key gap fill level, then you're going to want to be hitting puts. So that was one confirmation for puts using our key levels. Now, what was another thing that I had stated? If the SPY does gap up and if it has a big move up, what would be one of the best ways to play it besides, shorting using bearish confirmations at our 415.50 level? Well, what I told you was identify the support, right? So as you can see, if you look at the chart right here, this is very simple. SPY has a lot of support at this 413.80. So it had a big crash from 415, partially filling the gap. Then it started to bounce and it started to bottom at this level right here, this 413.80 level, right? So this 413.80, this is your support. So what did I tell you? I told you wait for the support to crack and then wait for it to have a massive drop. Then when it spikes back up to that previous support, short the SPY, buy the puts. As you can see, once it cracked this support, right, very, very simple. So there was a small bear trap that was created at the open with the morning spike right here. This is going to be your support. Very simple stuff, right? So you see the bear trap get created. You see the support that was forming. This was also pre-market support as well right here, right? So when it cracks through this 413.80, it has a massive drop. What do? Don't short into the drop. Don't short into the crack. Don't buy the puts into the red. Wait for it to spike back up. And when it tests this previous support right here, this is your previous support, right? This is where the this is where the bear trap triggered at open. And then this is where the bull trap triggered shortly after the open with a massive crash. Where was the massive crash? As soon as it cracked the support. So when it retests that support and it spikes back, you see the bearish wicks, the lower highs, previous floor, now resistance, previous floor, now resistance. You short, you play the puts. So those were the brilliant ideas in terms of literally what I was telling you guys to do if it has a move up based off of yesterday's video. So everyone should be green in that sense, right? Now, let's discuss, you can see right here, this is very nice as well. You had key support at 408.64, big upside potential. If it cracks and go under, then it fills the gap. It never cracked, it never went under. And notice, I talk about this all the time, when SPY's on a big downtrend, when it forms that first green bullish 30-minute candle at key support, it tends to spike. Look at this. It had a massive move up from this 408.74. History repeated itself. First green bullish 30-minute, and then it started to skyrocket. See how that's all predictable in a sense in terms of how high it can go. And then you have the bullish 30-minute, which means it's going to continue on the bullish 30-minute, bullish 30-minute, bullish 30-minute continuation, right? So now that you can kind of see some predictable trading opportunities and some strategies that can work both ways, let's kind of go over what we're looking to do tomorrow as day traders. So 412.85. This will be our middle key level, 412.85. 412.85 is going to be one of our key levels. You can write that down, 412.85. Another key level is going to be 415.50. Another key level, this is going to be our higher level if it has a crazy move to the upside and it breaks above 415.50 and they turn into support. Our next level for puts would be that 419.99 level. We still have a gap at that 419.99 level for the put options, right? So I'm going to be breaking down on how to trade all of this in just a second, but let's just mark out these levels, right? So this is what I want you to understand. This is what I want you to focus on. Let's take a look at the chart here. So 412.80 you can call this like your make or break. You have a big resistance, massive resistance towards this 413-ish level. If it reacts as a resistance level, then we will see a pullback towards 412. In order for this to flip super bearish, it has to go under 412. If it goes under 412, then we go to 411. If we crack 411, then we go to 410. If we crack 410, then we go to 408.70. If it holds 408.70, we spike back up to 410. If it cracks 408.70, then we start to fill the gap below and we go to 405. Best price for calls would be 405, right? So in terms of your overall range, and what I want you to understand is we're going to break this down from the overall channels, right? So for the bulls to maintain bullish, they just need to hold 412. They need to hold 412. They need to break above 413, 413.70s, right around there. They break above that. Then they really start to fill the gap at 415.50. If they fill the gap at 415.50, the only level I would try puts is at 419.99. 420 would be the only level I would consider puts if this were to break above 415.50, right? So if we were just to work the elevator down, and you can write these levels down, right? So basically these levels that I'm giving you, if you see it reacting as a support, as a floor, as a bullish confirmation, it's going to trend up to the next level, one level at a time. If you see it reacts as a resistance level, as a roof, as a bearish confirmation, it's going to trend down to the next level. So in terms of your price action cheat sheet, if you were to break it down for a more micro 30-minute scale, 419.99, that would be like your best gap close reversal level for puts. 417.62 is the next level. 415.50 is the next level. $414 is the next level. $413 is the next level. 412, next level. 411, goes under 411. 410 goes under 410. 408.70 under 408.70. 405. So what we do know is, in terms of the best levels to hit puts, 415.50, you get stopped out, then you wait for 419.99. In terms of your best levels for calls, 408.70, you get stopped out, then 405. That's what we know, and that's where you really can't go wrong in terms of your true best levels. So again, you try puts towards 415.50, tight stop, you get stopped out, then you try puts at 419.99. You try calls at 408.70, tight stop, you get stopped out, then you try calls at 405, right? Those are your best overall ranges, right? So in terms of best overall ranges, your puts at 415.50, your puts at 419.99, and then your calls at 408.70, and then your calls at 408 to 408.70, and then your calls at 405 if you get stopped out. Using about a 50 cent to $1 range stop on these overall trades, right? Now, we went over the key levels as well, but what I want you to understand is, man, to go bearish heading into tomorrow, this needs to quickly go under 412. If they cannot bring this under 412, it's going to be a super bullish day to 415.50. We could try puts at 415.50 with a stop towards 416, 416.10, 416.20. We get stopped out. We wait till 420 later into the week. That would be the overall game plan, right? So as long as we maintain above 412, SPY's bullish. If it goes under, then we start to flip bearish, right? So if we go into 412, we start to flip bearish. Then we go to 411. Then we go to 410. Then we go to 408.74, right? So those levels that I've given you, we're only looking to day trade one level. We're just looking to day trade as a one level target. We're not looking to hold for really longer than like 30 minutes. We get in and out very quickly, usually within a couple minutes, right? But those are your overall levels. Those are your overall analysis. We do have a nice bearish 30-minute candlestick on the close. However, SPY is trending up during after hours, but we're gonna have to see how this reacts at 8:30 a.m. Another tip I can give you with this whole data that's coming out tomorrow early, just use what I told you. Wait for the overreactions, man. If you see a massive move up, wait for the pullback. It's so literally how I explained it in my video. It worked perfectly. If it has a massive move up in the pre-market, you do this all the time, has a massive move up in the pre-market, where's the support? Your support is right here at this line. Support, supported open, right? Mini bear trap. When it cracks support, let it crack. Bigger the crash, the better. When it spikes back up to the previous support, you're hitting puts right here. You're hitting puts, right? Very simple stuff. Play the overreactions, right? So that's what I would recommend if this were to have a move up. And like I said, 415.50 to 419.99, right? So that's what you need to understand. That's the overall analysis that we have as of now. And there's going to be more updates within the chat heading into market open tomorrow. So yeah, guys, that's really going to be it, man. And if they turn this 413.80 into support, man, it's going to go super bullish to fill the gap, and I would sway away from puts. I would wait for it to fill the gap if that occurred. For this to flip back to bearish, we're going to need to go under 412. This needs to go under 412. If they can't bring it under 412 to 412.80, it's going to maintain bullish, and it's going to have a nice bullish day. One thing I will say is in terms of the daily candlestick, I'm leaning towards bearish. I'm overall bearish on this daily candlestick. This looks bearish to me. It just looks overall bearish. If you look at the daily chart, this looks overall bearish right here, and it nearly filled the gap. I feel like it's going to want to reverse to start to trend back down towards the, lowerish end of the channel. So that's where I'm leaning in terms of the overall market. I'm leaning towards bearish. But if they continue to hold this 412, we got to wait till 415.50 to hit the puts. And if we get stopped out, then we wait till 419.99. So just don't hold your hopes against the best levels, right? So if you're buying calls at the second best price, which would be that $408 to 408.74, you don't risk a lot, because if it cracks and reacts as a resistance, it goes to 405. If you buy puts at 415.50, you don't risk a lot, because if it breaks out, reacts to support, then it goes to 419.99. So just don't risk too much. If you're using the best levels with confirmations, you can look to risk a little bit more, because the risk to reward will be a lot better in that situation. But just to understand, man, the true levels, in terms of the levels that I'm going to be targeting tomorrow as a day trader: 419.99, 415.50 for puts. 412.80 is your closing price, your previous closing price. This is your make or break upper middle. And 408.70 is a key level for calls. So is 408, and then 405. So basically, my best levels to be trading at: 419.99, 415.50, 412.80, 408.70, $408, and 405. Those are my best key levels in terms of how I'm planning to trade this buy. I will see you guys heading into market open tomorrow. Thank you guys so much for tuning in. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. It's a one-time fee, and you get lifetime access to everything included within the program. Everything is explained in the first link down below in the description. It includes the chat room, the Discord server, the live trading voice channels, the live trading streams, access to the moderators, the educational course that teaches you the gap trading system, risk management, position sizing, psychology. There's so much more to it. If you want to check it out, it's going to be that first link down below in the description.